Hi everyone, this is Lance from PDT and with us today I have Arlissa from Educator for Trader. Did I say your name right?
Educator 2 Trader.
Educator 2 Trader, I'm sorry, not 4 2. How are you doing today?
I'm doing good today, doing real good.
Great. So I wanted to talk to you because we have both pretty similar career paths in a way. You used to be an engineer, was that correct?
Yes, I was.
All right, so engineer, and then you became a math teacher at some point, and now you're currently a trader. Is that correct?
That's the truth. Trading and trying to help the people.
Sounds good. Yeah, I'm still a teacher. I teach science, and I'm a trader
I'm still
as
a
well.
teacher too.
Oh, nice.
I teach math.
What grade do you teach?
I teach college. I teach at the university.
Oh, nice.
Yeah.
Yeah, I tell my students in chemistry the devil got all his power when he put math and science together.
Oh my goodness.
We have a lot of math and chemistry, and they're like, wait a minute, I thought I was in science, but you got to put both together.
It's all fun and games until they start putting in the letters in the math. And then you're like, what are we doing? What are we doing?
Right. And then you have all these variables like, why are you using this different letter that's not even related to what we're talking about? They ran out of letters. That's why.
Yeah.
Right. All right, awesome. So how has your career path, engineer, teacher, and trader, how has it helped you in your trading, do you feel?
I feel like it's been helpful from the standpoint of, I mean, as an engineer in school and such, you learn things in a very strategic and logical manner. So trading, you need some of those same steps. Now, where now the education background comes in, I feel like if I learn something and then I can tell it to someone else, that really means I've got it, basically. I've learned it. When you can teach it, you've learned it. So my educator ability comes in a lot when I'm coaching traders and helping people to learn along with myself. Just, can we put this in step by step? Can we put it in some type of, flow pattern? Helps make it simplifies it for me. And for me, I also don't like a lot of different things happening. If there's too many things happening at once, and I know that some people, in addition to me, not just me, can get like thrown off by too many inputs. So I try to make sure things are simplified. So I feel like my background in engineering and education has brought us right into here, because it just, taking complex concepts and then simplifying them down to where they can be in bite-sized pieces and can be, taken in by the general person. We probably can keep using that.
Yeah, that's a good point. When I'm teaching my students, I tell them, students that are pretty much getting the material, now try to teach others that are still having trouble with it, because not only will that student get another viewpoint of how to do this, the person that's teaching them will also know it better as well.
That's right. That's right. That's right.
It's all about being just a communal, everybody benefits from this mutualistic relationship, so to speak, right?
Right.
Yeah. Do you use anything with statistics, probabilities at all? Because I know if your math background, a lot of trading background, a lot of these trades are based on statistics. Do you want to elaborate on that?
Yeah. So what we do, because I do coach and we do trade credit spreads and all the seller related stuff, and we want to be out of the money for the expiration of our trades. We use we have a couple of strategies that we use that include the probability out of the money column. Not sure if anybody uses that one on their option chain, but we'll use delta. 16 delta is the one standard deviation for those who want to pull in the statistics. 16 delta or less is one standard deviation out going either way, which basically says that there's a 32% chance that this is going to expire outside, which is what you're looking for. The odds as best you can get them. And then if you want to go to another standard deviation, you go out even further, but there's not usually premiums out there. But using the whole bell curve and one standard deviation to say, if we get our spreads, if we want to do iron condors and we're out at least 16 delta on each side, then you got a better chance of being successful. So definitely we incorporate the use of delta, the use of the probability out of the money, because we want to be out of the money, to help us determine strike prices. Then you have to balance that with improper entries and all those kind of things. But that's not the statistics piece. That's more like waiting for price action.
Yeah, definitely agree. I do a lot of similar stuff. I'll do a covered strangle quite a bit, where
Okay.
I'll start one standard deviation out on a sold put, and then I'll sell another one even further out, almost two standard deviations. And I'm okay getting assigned on these because if it goes past that one standard deviation, you're getting a good entry price, and then
Yeah.
you can deal in and sell calls against it and whatnot.
Mhm.
Do you typically do stop outs at certain points when a market's going against you, like towards that standard deviation?
We really struggle so much, and maybe you can offer some more insight here because I've not come to a good with spreads. Spreads are so wonky. So, wonky from the standpoint of the price can be right at your spread, and your spread is actually still good, right? But as far as but from a price standpoint, if the price is hovering near your sell leg, you could be in stop out territory, even though the trade is still good.
Right.
Right. So we struggle a lot with do you want to do, maybe a 2x or a 3x dollar amount for the stop out, which is, not necessarily the best thing to use for the stop out, but then you get stopped out, price turns around and you're like, I should have waited.
Yeah.
So yeah, that's the that's the probably the if I was to say there was a thing that could be like fine-tuned more, it would be determining what is a good place to put stops.
Yeah, that's true. There's a lot of members that I work with as well that might have slightly different methodologies on how to stop out. For a zero DTE, since it's going so quickly and obviously you could win or lose that day, I just do a hard 3x stop and I just base it
Okay.
all on probabilities.
Yeah.
So if you're taking in, say, $50 in premium, you're going to stop out at 1.5 or
Right.
$150. You end
Right.
up losing $100 in that
Right.
case. So then you need two winners to offset one of the losers.
Okay.
And then you would essentially break even at that point, assuming your $50 just goes to expiration at a full profit. So I try to treat it as a complete probability based exercise. So if you're selling pretty low deltas and 0.1, 0.15 delta, you should be winning like 90, 85% of the time. Obviously, it's going to be a little bit less if you stop out at the 3x stop. However,
Right.
it's going to be higher than the 66% initial win rate. We're looking at around 84% right now for the year on my zero DTEs. So in the end, the winners do offset the losers, and you have
Yeah.
a little bit of a positive expectancy there. But there are a lot of different ways that you could try to manage it. A lot of people try to roll them, go out to the next day, and buy back that spread, selling one out, which is perfectly fine if people are willing to take the time to do that.
Right.
But to me, I think it's a lot of management, and sometimes I just treat it as, all right, you're out of that trade, just move on to the next one.
Yeah, do what's the next one. One of the things we utilize too is we'll use the PDT hack for the people who don't have, a 25K account but don't want to burn a day trade to close it. So to use a PDT hack to put the other side on to lock in a lesser loss really is what you're doing there, is you're locking in a lesser loss. You're going to pay a little bit in fees, but you're not going to at least, burn up a day trade. But then you also get to where, not that you trade on hopium, but after a certain period of time, you're like, this could possibly turn around.
Yeah, yeah, that definitely happens. One of the things I recommend to people is once you're out of the trade, don't even look at it, because then you're going to start overthinking and second guessing yourself. Like, oh, if I only stayed in, it would have.
Right, right.
The problem with a lot of these strategies is if it doesn't work and let's say it just keeps continuing to go against you, and you hit a max loss scenario where you're down, say, $500 on a 5 with, the strategy pretty much breaks down at that point because it's going to be too hard to make that up over many trades.
One thing you can do there is potentially put on some, and you can't even do this too late because the premiums aren't there, but to put on some additional trade. But that means you need to put more collateral into the trade, which another 500 or 1,000, because now you've got to like double up and triple up in order to get the money back that you lost, and you probably still won't get it back. Not in that day. Not on that.
Yeah, you're right. And then, especially if you're under 25,000, it's going to be hard to deal with adding on additional trades too. Because what if that doesn't work? Suddenly, you're using 2-day trades in one day, and then it gets a bit crazy at that point. Have you ever considered using futures for zero DTE? Because I personally haven't done it before. The commissions are a bit high that way, but it would get rid of the PDT. I know you could do the PDT like offset, where I think you essentially do a box spread and buy them back. But have you considered futures?
I looked at futures before, did a little bit of learning, and then I pulled up. I just was like, let me see. I don't know. I have some friends of mine who do futures who seem to be doing pretty well. It just seemed like a whole mindset shift. And I felt like because I have a community of people who trade with me, that I have a membership and all, I felt like if I made the detour into something while we were still on the ride, to credit spreads, I either had to, take the whole group on the ride with me, or I needed to do them in conjunction. But I felt like in conjunction, I was going to be asking for too much. I don't have the bandwidth to do both. So I was like, I'm going to be asking for too much of myself. So let me just stay on the path I'm on at this point. But I do see some benefits of futures. Maybe some point in the future,
Intended, right? Yeah, what I gotta see as well is that there's so many different strategies in my head, and sometimes I'm just not willing to share it with everybody because we're already doing so many things as it is. Like we're gonna add on another one now.
Yeah, exactly.
Let's just take it with the pace of the group, I would say.
This is true.
So would you say zero DTE is your favorite or preferred trading strategy, or are there other ones that you might go longer dated out or different positions, like different stocks?
It's a good question. So I have my pros and cons, or my likes, favorites are based on what I'd like to get out of it. Now, this is where I struggle. I like the SPX XSP daily zero DTEs because I can see the return on the money the same day. I don't like it because it is such a short period of time that you get to trade it, but I do see the strong probability and possibility. I do also like the week long credit spreads that include just all the other stocks basically. And even then when I do those though, I usually do them like I may enter on a Tuesday or a Wednesday and get out on Friday. So even still short. I've done it before where we did some probability stuff, even our group for longer term, where we went out like 4 to 6 weeks. And I don't like those as much. I do like that the premiums are more there, but I don't like the fact that I've got to look at the trade for so long in my you know what I'm saying? I don't like that I got to look at the trade for so long. The premiums you take in are nice, but then when I think about, I'm going to look at this for 6 weeks and I know that theta is going to be working faster if I get closer. It's kind of like my mind then goes back to, I could be using the same collateral and I could go and do some zero DTE stuff. I keep, my mind thinks that if I'm going to put a couple hundred, if I'm going to do 3 or 4 different one spreads on some different things or whatever, then I say this is $400 or $500 I could put over on an SPX, or I can put 500, 5 trades on XSP each day. So that's really where I go back and forth. I don't seem to like the long-term stuff anymore. I think if I was, that's probably the least desirable. Even when I do cash secure puts and cover calls, I still like to do those maybe out a week, out 2 weeks, 3 max. So yeah, if I was gonna go favorite, I like the zero DTEs for their possibility. Even if you return 5% a day, you're going to, that's got a good compounding effect. But of course, one big max loss takes out a lot of daily profits get taken out all at one time. But so between those and credit spreads, those are, or the credit spreads on other ones maybe on a weekly basis, those are probably my favorites.
All right, I'm thinking almost the exact opposite of you at this point. I love going really far out on expiration dates now, which is very interesting. Like sure, zero DTE, the day-to-day could be really good. Like sometimes it'll make a few percent a day, and if you could keep that going, obviously it's great.
Right.
I like the longer dated stuff because it still reaches my personal goals, and I'm trying to get 2.5% a month total.
Okay.
Which will more than reach my goals. About compound interest. If you go many years out, making 2% a month consistently, I mean, this can be great. So what I like about the longer DTE is you could go really far out of the money instead of staying pretty close to the money. So the last few weeks have been pretty big down days in the market, and doesn't really phase me much because I'm going 90, 120 days out at sometimes.
I also feel like what you're doing, I mean, I think, like I said, I feel like as your account grows and gets bigger, then you get less, you're less comfortable putting as much leverage on a zero DTE or something that's weekly, because you really have the capital and the collateral to be able to go out further and still be able to rinse and repeat and pull in. Because you can decide, I really like the NVIDIA for 6 weeks or 90 days out, and you can pull in a really good premium on that because you can afford to let the collateral sit and utilize that trade. I think that's probably one of the big differences there.
Yeah, that's a good point too, depending on, are you trying to grow your account with a smaller account, or if you already have a relatively larger account.
Yeah.
One of the things that I look for is in an individual trade, I don't want to lose more than 3% of my total account value.
Okay.
So if you have a $10,000 account, you want to make enough trades where it's like, to me, the stop loss would be about $300, because that'd be about 3% of the net leg.
Yeah. Mm-hmm.
Obviously, if you're doing zero DTE, I might even do less than that, just to see how the market's doing at that time, and for different trades. What are some mistakes you think you've made so far in your trading journey, and any things you could say you learned from it?
Yeah, that's a really good question. I think one of the things that I've seen as mistakes for me, just overcoming, and this is huge for everybody, not just me as a trader, but overcoming the psychology piece of it, right? Overcoming just the greed. I don't really have the FOMO piece, except for the standpoint of, this is where the FOMO can kick in, or fear of missing out, is you see this huge run up happening for the day, and you're like, if I jump in here now, I can get, put credit spread, and I can ride it. Before long, this will be expired worthless. So you jump in when you're thinking you got some whale going, and before you know it, it hits a huge resistance or support area, and then your whale turns into a minnow. And then you're like, no, what happened here? So that's where the FOMO can kick in to try to go into early. I believe that's probably a mistake of mine. I trade, and I'll look at sometimes, because I am still teaching, I may look just at the option chain and not necessarily look at the option chain and the chart. And on the option chain, I may look just for the probability number and say, well, the probability of the money is showing, 80 or 85%. Then I'll go, this should be a good strike, but not looking at the chart that shows that this may be an 80 or 85% out of the money, but the price action has just turned and it is running in my direction, so that's one of the mistakes I think I've made before, is not combining the things, or not looking at the combination pieces, just picking one thing and using that as the determination, and then just really being premature, the patience piece, because as sellers, we don't, even on zero DTEs, I don't have to enter in the morning. I literally can wait till the afternoon and enter as late in the day as 3:59. I've taken trades at 3:58.
Wow. Yeah. Definitely possible. The psychological piece is definitely very tough, and I think everybody deals with that. I mean, me included. A few of the things that I probably did was hold on to trades too long when I just got out of it, and there were some meme type stocks that I definitely stayed in way too long and should have just closed out. That whole 3% of net lick. Now I'm following it to a T, because there were some trades that I could have lost a lot more than that. Do you see that other members in your group follow very similar issues in their trading, where they have issues with psychology?
I do, and we talk about it a lot. For that reason, we do come back around to the greed, because one of the things, as a seller, you don't want to chase premiums, but it's almost impossible not to chase premiums. So I have to, all of us, we talk all the time about, if you decide a strike that you really like, you have to put the trade in for an amount that you're okay with and let it sit and just let it be working. And if it comes and picks up or fills that trade, then cool. But if it doesn't, you have to let it go, because your psychology piece will want you to come one step closer, and that one step or 5 more points closer on SPX can be the difference between a good trade and a bad trade, because you're trying to get the premiums at the time that you're entering. So I do think I think it's the nature of the human to just really want the most we can get out of this, the greed, the FOMO. I don't want to miss out on something that's a huge run. I don't want to miss out on it, and so let me see what I can do. And then the hope piece, we don't want to trade on the hopium, like I said, but you're like, this is going to be great on the front side, and time passes and you're waiting around thinking it's going to come back.
And also the losers, like when you do hit the stop outs and people just get really sad about it. I mean, there's a lot of studies showing people get more mad losing $100 than they do making $100. If you look at, they're more mad than they're happy about winning 100. So it's really tough to deal with. One of the ways that I think is beneficial is just having that plan in place, having your hard stop out. And if you stop out, oh well, that's it. Just be a robot, and then you
Yeah.
move on to the next one, right?
Yeah, I think the point you made about making sure that you don't look at the trade after the stop out is key, because usually you stop out and you're like, you go and want to watch it to see what happened. Like, I should have stayed. And then you're like,
Right.
I staying would have been wonderful on some days, but it's not
Yeah,
wonderful all the days.
exactly. Arlissa, could you just describe a bit about your services that you provide and how you might be able to help other traders?
Sure, sure. So I'm of course educated trader, and I really support and coach option sellers for the most part. So we have a membership in the morning not in the morning. We have a membership that includes a morning pre-market call. We do a pre-market call every morning. We do bi-weekly. I do bi-weekly coaching every other Saturday, where we spend time either working a strategy or some other topic. Actually, we're leaning in pretty heavy on charting right now. That's where we kind of circled around the different strategies, then we swing back around to something that we see it needs to be highlighted more, and charting is where we are at this point. So we do that every other Saturday. And we trade together in a Telegram group. We have an exclusive Telegram group where we trade together. Me and my assistant are there to help support the trades and that kind of thing. So those who want to lean in on the seller strategy, zero DTE seems to be like a big piece of what we do, but we also look at covered calls and cash secure puts and working the wheel with that as well. So that's pretty much what we offer. Just support, some training. In a lot of cases I say I'm for beginning options traders, but I've expanded that to say I'm for beginning options traders and those who are beginning as sellers, because there are a lot of traders who start off as buyers and then they get disillusioned, but they decide that that may not be the best side to be on, and then they come to the seller side, but they need to be trained on that. So I run about every quarter. I do run an options 411, like a live training. It's a 6-week thing where I teach everything from starting with the options, the terminology, and then we go into charting, then we go into the strategies. We do that for about 6 weeks, and then that translates into weekly training where every week we're on every Wednesday. So that's a part of the membership too, on every Wednesday, talking about helping with specifics if it turns out to your platform needs, or strategy needs, or leaning in on a topic that we don't want to wait every 2 weeks to do. So it's a pretty comprehensive little membership, and it's $97 a month. It's not too expensive. But the person has access to me on a daily basis, not weekly, on a daily basis in the Telegram. And we do live trading on Monday mornings, just seeing what the open looks like. So we do a lot of little things. But one of the biggest piece I think for this is trading can be very lonely. Generally, when you're a trader, you're trading with just you and your phone, or you and your device. Just like, well, just me in my office. And just having a community of people, if it's nothing more than just saying, I'm looking at this strike, and somebody responds back and says, you might want to wait to the FOMC meeting.
Yeah, that definitely
you
helps.
know, yeah, having some people to celebrate with. We've done pretty good. On my little core of about 8 to 10 of us communicate back with the wins and all on a daily basis. And we pull in, you've seen some of my posts, we pull in 1,000, 1,200, 1,500 a day on our zero DTE stuff. I mean, we're pretty consistently among the 8 or 10 people who report, because there's more people trading in my community, but not everybody reports at the end of the day what they made in the money.
Right. In my plan, we also have a lot of people that are a little bit shy about showing their gains, which is fine. Yeah.
Yeah.
At datatraders.com that I run, we do a lot of similar stuff than you do. We're focusing more on futures at this point, because futures have span margin requirements, and you could get pretty leveraged trades that are actually really beneficial, and you can make your goals really far out of the money. We do some zero DTE every day except for those FOMC meetings. I don't want to fight Jerome Powell. And we'll do longer dated credit spreads as well on mostly tech stocks like Microsoft, Nvidia, Apple, stuff like that. And then we typically go around 30, 45 days out, 5, 10 with spreads. So yeah, pretty comprehensive. I do trainings as well. Done a bunch of ebook strategy guides that everyone could see, just going over in detail how we do these strategies.
Yeah.
And I do group Zoom meetings with the whole group. I also do one-on-one meetings quite a bit with individual members as they need to. So it feels like I'm a teacher all over again, just teaching a different concept and kind of.
I know.
Yeah. All right, so I'm gonna we'll both leave a description in the bottom of our videos to each other's YouTube page. So if anyone's interested, feel free to check out Educated the Trader. And then if you guys on Alyssa's channel could check datatraders.com. Leave any comments on any of our videos and we'll both be free to respond to those as well.
All
So
right.
Alyssa, it was great talking with you and have a great day, everybody.
You too. Have a good day.
Bye.
Mhm.